Hello ladies and gentlemen, and welcome to this new video where we are going to learn a new indicator on TradingView. Now I have my TradingView chart open here, and we are going to learn together how to use the stochastic. It's a very powerful and actually a very common indicator that everybody should also know about it, so that the trader who is, yeah, I mean you and everybody else who wants to develop a good trading strategy should at least test it or back tested it, so that you know it is maybe suitable or even not suitable for your strategy. So let's go ahead, go to the indicators here, and then type in stochastic. Let's click here. I already have put a star on it so that I can find it on my favorite list. Now you have beneath here the indicator, the stochastic. It should be actually the slow stochastic. Almost lost the ability to talk here. And it's actually a very good indicator. It's an oscillator indicator, which means it's actually very powerful during a ranging markets, but it can also be used in trending markets. And yeah, let's just see some couple of interesting moments where the indicator is flourishing. Now let's quickly see how it works, or how it is structured mainly. So the indicator is equipped with a fast and a slow moving average. Should be actually the moving average, I hope so. You can correct me down there if I am wrong, but it's actually not it's not really relevant what it is. What is relevant is that if you use just the standard setting, you will be fine. You can use it very good and precisely in your trading. Let's say we are here on a ranging market, and we are looking for entry signals. Here, for instance, we can see how the market goes down. Of course, we won't see it in the real market. If we, let's say we are here now, we want to know, well, what should I do? Should I buy or sell? But that's something that I won't go further. Let's just say we are here and we are not seeing this here. The only thing that we are seeing is that the market is overbought, which means actually you can also look it from this way. It's like a heat meter. It's telling you if the market is overheated, or in this case the official terminology would be it's overbought, or if it is not overheated, like it has a lot of capacity to go up, like it is oversold. So the machine should not be too warm, but neither should it be too cold, because it would break then. Let's put it this way. I hope you can work with that. And every time when it comes to this area, which is by the way above of the 80 area, or you can also say it's 80% and above to 100%, and here we have 20%. You can, just for sake of this example, let's say this is like 80 degrees and this is like 20 degrees, and the machine should be should move between 20 and 80 degrees. Yeah, it should be really as an simple example so that you really understand this tool. So every time when you see the machine or the market is overheated or overbought, like in this case, you can say, okay, I am waiting for a red candle. Let's say this is enough. I will enter here. Or sorry, let's make it better. Let's wait until the market crosses the 80 line, the 80% line. And let's wait. I think here this or this candle or even this candle will be enough. Let's say we enter this market. We are ranging here. 3 days are passed already, and we've been already after 3 days and 60 hours on almost 160 pips. So it's actually that we can consider as a good trade. And now we can see here we have an oversold market or overheated market. And then you can say, okay, I'm waiting until this line is crossed, and it's somewhere, I think this one of those three candles will be like an entry signal. Let's say we enter this signal, this candle here. Let's wait a couple of days, 1 day, 3 days, yeah, like 4 days. We have already 81 pips collected here. This is one example how you can use it on a ranging market. And bear in mind, we're here on the 4-hour chart. We can also go down to, let's say, 1-hour chart. And let's test it here. And the lower we are on the time frame, the more we have signals, entry signals. Here, for instance, we can see it's a downtrend on a 1-hour chart. You can put a line and you see, okay, yes, this is a downtrend. Let's say we are here somewhere and we don't see the movement here. Let's make it actually realistic so you see how it works. Let's a little bit here. Yeah, this is like a live an example. We are waiting until those two EMA moving averages are crossing the line. Okay, this is almost crossed. Let's wait another one. Okay, this is officially crossed. Especially when you see a red candle and when you are shorting the market, this is a good entry point. Let's say we're putting here this, let's say 150 pips we are ready to lose, and we want the 1 to 2 risk to reward ratio. Let's see how it works, just as an example. The market is moving, and we can see he is already. You could also say, okay, I'm entering when it crosses this line, and exiting when the line is crossed here. Well, it depends on your individual strategy that you are using. Let's go to the extreme. Let's not care about exiting right away. We want to see how it works. If it works well, actually. Let's see. It is quite good, and it's not moving very strongly down. Sometimes you have those markets. It's a little bit annoying if it is, very slow when you're waiting for your pip gain. But you can see it's actually very powerful as an entry signal. But I don't know if you should use it also as an exit signal. I don't know. I never use it as an exit signal. I only use it mainly for an entry signal. But you can see it's quite good. If you are patient and if you let the trade work, theoretically you could be able to take the profit because you already took the at least one risk that you put in this trade. And let's quickly move this here, and we're gonna measure it. Yeah, it's like 5 days we have collected 212 pips, which is quite nice, depending on the amount that you invested. Of course, if you have a bigger trading capital, the bigger is the reward. And remember all the times to risk not more than 1 to until 3% of your total capital. And yeah, let's say this will be like $1,000 that is at risk here. You will be then like, yeah, $1,400 minus the spreads that you have to pay. So actually not bad for how many days was it? Already forgot. It was like 5 days. Yeah, 5 days and 16 hours, which is actually very good. And you can use it on any time frames. It works very well. Stochastic, it's powerful. I would use it maybe together with the 200 EMA. It's how I use it. Let's type in the EMA. Let's take this one. It's easier to install. And let's put it away. Oh, this one. Yeah, it's the 200 EMA. You can like tell to yourself, hey, I'm working only on the 1 hour chart, and if I see a buying signal, let's say if the price is above 200, I'm only looking for oversold moments or oversold market conditions. And then you say, okay, this is for me oversold here, and I'm moving in with the long position. Yeah. And then you wait like 2 days and you have like already collected 68 pips. Well, it depends what kind of strategy that you have. If you're a position trader, you would have gained like really a lot here. After 6 days, already 454 pips, which is like almost 4% price movement in the upper direction. And for somebody who's working full time, it's actually a very interesting strategy. I mean, you can also work only with 200 EMA moving average and the stochastic. You already have a very powerful tool to be, or instruments or strategy. You already have then the equipment to be a position trader, a very successful one even. And if you combine it even with the fundamentals, like if they are like, I don't know, the Federal Reserve or the Japanese National Bank is changing the interest rates, you already have like the, let's say, the bias in which direction the market will move. But you can also just stay or stick with your strategy as a position trader slash technical trader without the fundamentals. That's also possible. And like I said, just look if the price is beneath or above the 200 EMA. And if it is beneath the 200 EMA, you only look for sells. Like if you see this here, you just ignore it. Yeah, because usually when you trade with a trend, you always gain. You're always in an advantage. Or those scalpers, they are like trading upwards here because they're on a 1 minute chart, but we are here on a 1 hour chart, and this is already suitable for let's say a swing trader. And it's really powerful. I mean, you just have to use those simple rules, and yeah, just be patient. And after 3 days, you already have 73 pips. It's really powerful. Yeah, of course, the markets are moving up and down. This is just natural. You can also go on your daily basis and say, okay, I really want to trade it, professionally. Then you look here for some interesting entry points. Yeah, you can see here it's all resolved. You're waiting for red candle. Let's say you enter it here, but then let's say you have 100 pips stop loss. You came like on 88 pips, which is very quite nearby the stop loss. But then you are a very patient trader as a swing trader. After more than 2 weeks, you already have like 184. That's like almost a 1-to-2 risk to reward ratio. I would say 1-to-1 risk to reward ratio is good as a, for the beginners. And yeah, just try it out. Just take the 200 EMA and the stochastic, or just use the stochastic, whatever you prefer, and test it with some instruments. I have here, for instance, the Euro Japanese. It's actually very suitable for swing trading, or even the Great Britain Aussie is also usable or good or suitable for swing trading, or even for position trading, depending on your strategy. And yeah, I hope you liked this video as an introduction to the stochastics. It's a very powerful and commonly used indicators among the traders, and I can really highly recommend you to at least to try it out, to back test it, and to see if it is suitable for your personal trading strategy. And if you want more videos about the stochastic or other strategies that involves the stochastic, just feel free, write it down on the commentary section. You can ask question and put your wishes for the next video. I will try to read all of them. And yeah, I hope you learned something in this video. If you liked it, give me a thumb up, and I hope to see you in the next video. Have a great one. Bye bye.